Welcome, everybody, to another week of Wealth Wisdom, where we're helping you build wealth and legacy.
Companies are like an organism trying to survive.
It's always a risk when you're investing in a company that's purely tied to someone's brand.
45% of Americans have gone into debt for a Disney trip. All right, guys, welcome back to another week of Wealth Wisdom. It's an exciting week. We've got a lot of news to cover. First, biggest news, Trump wins the 2024 U.S. president election. Markets are pumping from the news. And then on top of it, Fed cuts rates 25 basis points. I want to dive right in, Eric, Bill. There's a lot happening. Markets are up. Let's just dive in right away. Trump's proposing a ton of tax rates. Do you, Eric, think it's because of the tax cuts, his economic policies, that is exciting markets, or?
It's probably a mix of everything. I think markets were expecting those. Like, they know his policies. They were starting to expect he was going to win. Knowing the market hates uncertainty like at all, though, you're seeing a bump post-election results. Now they know what to expect with his policies. They're going to expect some tax cuts. They're going to expect some tariffs. And we've seen some movement in the market because of that. Up, I think it was like about 3% day of the election, another like 1.5% for the next day. So we've seen some nice movement.
Yeah, it's been great movement. I think everyone's talking about Trumponomics or Trump economics, however you want to say it. Tax cuts, he made a lot of promises during the campaign. Bill, that's your area of expertise. What are you thinking off the rip about what he's proposing?
Yeah, there's a lot of stuff there to digest. Some of the things we'll see if it even comes to fruition. There's always a lot of promises, and then when they actually look into it, what's the feasibility of this, and how much does it even make sense? Little things like a no tax on tips, I think that's a good thing, right? For especially a segment of the population who is obviously so reliant on those tips. And I think, unfortunately, just the way the payroll schedules work and things along those nature, those people, right, they tax on these tips. They don't have a lot of withholding on right throughout the year, and then they end up paying this big tax bill not prepared for, because they do, it's a segment of the population who, some do save money, but a lot of them do, they are in a paycheck or month to month type of cash flow situation. I think it would help. I mean, those a lot. No tax on overtime. I feel like that might be a little tough to make. I feel like it would be a logistical nightmare in terms of ripe with fraud, things like that. So that one, although it sounds great, I just don't see that coming to fruition.
Do you mean people lying about their overtime hours, or
100%?
Is that,
I just feel like that's just, to police that and put that through, I find that would be very tough to put together. Maybe someone who's much smart, maybe not much smarter, but smarter than I, would think of a way to do it. But to just sit there and just report hours and say, oh, no, this was overtime, no tax on that, and something like that, I feel like that would be, or you could just reduce base salary. I don't know, just to me, that's ripe for fraud. It would be a very tough thing to police. And I just don't see that happening as something that gets put forth going forward. He's talked about other stuff too, about no taxing of Social Security benefits, which was actually the case of when Social Security was initially put in place years ago. That was just something that it still is non-taxable for a portion of the America. It's a progressive scale, right? So as you make more money, more of it becomes taxable. Now, the reality is, like a lot of tax law, not moved up those numbers over time. A lot of times they'll put in things and then they don't hedge for inflation. So those numbers have stayed the same since basically they made it taxable years and years ago, and they haven't moved that up. I think I would be more in favor of maybe moving up that number a little bit as opposed to making it non-taxable altogether, because I do feel like people who do make more money, they can afford to have that taxed. And when we talk about a progressive tax system, people paying a little bit more, I do think there's a sector of the population who receives Social Security benefits who should be paying maybe a little bit more in tax. You know what I mean? If you have pensions paying you hundreds of thousands of dollars, maybe even more than that, if your net worth is 5, 10 million plus, chances are your cash flow from a tax situation is going to be putting you in an area where, if you're getting Social Security benefits, you don't really even necessarily need them. So to be paying tax on that, I think that probably could be helpful. Kind of takes us to also to is should we get rid of, you got the whole other group. Should we abolish the income tax? Should we do all these things? My thing is, in 4 years, that would be a very tough thing to penetrate into our way of life at this time.
I think we
To
should
kind of have that
abolish
override.
the income tax.
That's fine in a couple lab with, okay, what's your plan on for all these things? And I guarantee you're going to have a very limited answer. Now, like
Yeah, I
a lot of
know.
people, the person who tells me that, they have a very simple answer for an extremely complex question. This is something that has been in place for, I don't know how many years, right? 50 plus years, and you want to unwind it in two. Just things like that you've seen the way the government works. It is not a fast moving organism, right? This thing is something that goes at a crawl. To do something that has been in place for that long and then try to do it, it's a logistical nightmare. They make a lot of mistakes when just doing basic things, which end up being extremely expensive. It costs the U.S. taxpayer a ton of money. How do we know that something like that wouldn't be handled correctly and put us in to potentially even further debt and have further issues? You know what I mean? I don't know. I'm more in favor of doing more things with the tax code that would have us paying less, putting incentivization in place through the tax code, things like that. I feel like that's a better way of doing it than abolishing it altogether because it's so ingrained in how we do things. I just think it would be a logistical.
Oh, for sure.
I think it would be extremely difficult to get rid of. It's nice to say, let's get rid of the tax code. We'll replace it with X, Y, Z. That's fine. Just until you actually, when you roll out any mass changes, there's mass problems. We're going to try to roll something out our presidency's only 4 years at a time, right? Sometimes they get that 8. In this case, he gets a second term. Only the second president who's been able to lose and then come back. For the most part,
Yeah.
you're just not going to see the continuation, things like that. And I would find it very difficult, especially you got to remember, yes, we have half the country who might that let's abolish, or not even, because I don't even think that all Republicans think abolish it. But you got another half of the country who probably wouldn't be in favor of that, right? They were calling for more taxes, more things like that. We're pretty still evenly split, even if Donald Trump is presidency at this moment. Don't be surprised if in another 4 years it switches back, because we've seen it time and time again throughout our nation's history.
It sounds like, Bill, you're skeptical about how quickly they can implement some of these changes. Let me just run through the notes. I just want to go over all the proposed tax changes. No tax on overtime work, tax deduction for auto loan interest for vehicles made in the USA, no tax on Social Security benefits, no tax on tips, making the tax cuts of 2017 permanent, potentially replacing income taxes with tariffs, lowering corporate tax rate from 21 to 20%, down to 15% for companies who manufacture in the U.S., leaving capital gains taxes as they are, not taxing unrealized gains, which was talked about, lifting the $10,000 cap on state and local tax, and then elimination of double taxation for overseas Americans. So, yeah, that's a heck of a lot.
It's a big list.
And yeah, Bill's concern is, okay, where's the revenue for the government to operate?
Okay, but when we talk about taxes, though, incentivizing, okay, which pushes investment in certain areas, let's talk about a few of those things and how the tax code can be used to incentivize business. Okay, so when we talk about auto interest, all right, there's one right there. You manufactured, it's a U.S. automaker, built here, it's things like that. Hey, we're going to give you a tax credit for that, right? You know what I mean? For being able to deduct that interest. There's a way, right? The tax code can be used effectively. One thing, the other one you mentioned, sorry, there was one on that. And then the other, I would like to see too, lifting the $10,000 cap on salt taxes.
In local taxes, yeah.
That to me is double taxation. It's double taxation. It's not needed. Why do we need to pay tax on tax? You know what I mean? That to me 100%.
Can you explain
should
to
be
people what
lifted.
that is, Bill?
So basically, when you file your income taxes, you can either what's called the standard deduction, okay, or you take you item deductions, right? And your itemized deductions consist of mortgage interest on purchases of on your home up to $750,000, okay, and that's mortgage interest. That's also home equity interest on money borrowed that you put back into your home. So if you do a kitchen renovation, you take out a home equity line of credit to do is deductible. You take a home equity line of credit and you go on vacation, that interest is not okay. A lot of people may still deduct it. It's very hard to police from the IRS's perspective. They would literally have to look at that very closely. Hey, show us the receipts of the work you've done, things like that. So it doesn't get policed, but that's what the rule is, okay, or the law is. So you've got mortgage interest, you've got medical expenses that exceed 7.5% of your adjusted gross income. You have charitable deductions from a cash perspective, non-cash deductions. Then you have the state tax you pay, income tax, and you have real estate taxes, right? And you can also like margin interest on investment account, things like that. Those are also things that kind of go into it. There is a host of other stuff, but these are the main points. The SALT taxes, so that's your state income tax paid, and your real estate tax right now is capped $10,000. Okay. You make, for example, Massachusetts, if you make $200,000 in income, you're essentially paying around 10 grand in income tax at 5%. So 5% on 200,000.
Yep.
So that caps you, right? I live in Massachusetts. My real estate taxes, okay, also very high, right? Living in Massachusetts, like we're probably higher than most of the nation. So right away, all the real estate taxes that I pay into my town, nothing for it. So
Okay.
I'm paying income tax on that money. It's non-deductible, thing like that. If I make over $200,000, you automatically. This hits most people, right, who live in like Massachusetts. I can't speak for the rest of the country, but I know for a fact that a lot of people that I know personally are heavily affected by this tax. I do believe they should get rid of that because I just think it's unjust. Like again, when I go back to, I don't mind paying taxes. I don't want to pay taxes on taxes. And that's what this is doing. Yeah. So when you're paying into your state and local government, I don't think you should then have to pay federal tax money as well. It makes sense to pay some. I in favor of the fair share. You know what I mean? Things like, to me, that's hogs get fat, pigs get slaughtered type. It's just too much right, at a certain point. It takes away from it. It's a way of getting more money back into the system for investment. Right? You do that and you give that right to a lot of people who can invest, put it in towards business, maybe hire other people within their businesses. They are employers of some kind, things like that. I think that would be a lot more helpful than putting that cap on it. And I think it affects a lot of people. I think there's a lot of people in Massachusetts or other states who, between the state tax that they pay and their real estate taxes, are paying a lot more than $10,000. I think that would be a way to give a lot of people, that would reach a lot of people, not just wealthy, but
middle class,
a lot of middle class, even honestly, like even low, you know what I mean? Low middle class, I think it affects.
So doing that would allow you to have a higher deduction on your overall tax bill against, yeah,
because you would go towards your, as opposed to you just getting the standard deduction. Now you might be able to itemize. If you get itemized, that brings down your taxable income. Therefore, you pay less money in tax.
Which could then go into the economy
so
and would be through bigger investment spending. As a small business owner, I would always argue, like, if I'm paying less in taxes, that automatically equals I'm going to be able to hire more people.
100%. Right, 100%. Or
exactly
invest in your business in some capacity. But if you're paying less in taxes, you are much more likely, right, to hire someone, to bring someone on, whether it be full-time or part-time help, because you say, I've got a little more wiggle room. If you don't have that, then it's just that would be a very helpful thing, I think, for a lot of people. And you got to remember too, middle class is different in different states, right? it may not be as expensive for you because
Of
some
course.
of the things that go on
The cost of living
with
changes.
your area.
Yeah.
100%. I feel like it helps some of those states that might have you're basically living the same life. You may make a little bit more money, but because
It's the same.
situation and things along those lines, your net
Yeah.
output is the same. This or even less, right? You know what I mean? Because you have these costs. This would be very helpful for a lot of people.
I think a
honestly.
lot of people who are against paying higher taxes, it's really because maybe it's a hunch I have, but it's an overall distrust of the government, right? You're having to pay the government this much in taxes, and a lot of people don't agree that they're using it in an efficient manner. And I think that's why you had Elon saying, hey, he's now starting the Department of Government Expenditures, I think, Doge. Yeah. And for a lot of people, I think that's a true feeling. Whether it is true in fact, I don't know. But Eric, what do you think about?
Listen, any organization has
Oh, for sure. And the bigger it gets, the more
the
waste.
smaller the exactly. The smaller the organization, the more lean, the more
Yeah.
efficient it runs because there's
It's harder to
less
hide
things
things.
The government is massive, right? So there's a ton of waste. You know what
Yeah.
I mean? It still probably runs pretty well, right? But of course, there's a ton of waste, and so and of course, a lot of watchdogs who are looking at things and reporting. Typically, you know what I mean? They're not typically reporting like the good things on the government. They're saying, okay, these are things that are causing this is a massive cost. We're getting nothing out of it. How does this happen? How does this happen? It does happen over and over again.
You see it happen all the time in the business world, right? You have activist investors who come in, they say, hey, you are running inefficiently. We're going to basically buy enough shares to get a board seat.
Just got the company.
Come in, probably end up firing a bunch of non-essential
That's the private equity
employees
play.
or cut a bunch of costs. Yeah, exactly. Or larger companies buying up smaller companies when they see inefficiencies. So they're
100%.
taking that same strategy
Absolutely.
and applying it to the government.
Yeah,
However,
you can't do that,
I'm
right?
sure there's
Necessarily with
limitations
the
what
government,
they
it's very
can
tough to do.
accomplish.
That's the problem.
Yeah, yes. I agree with you, Bill, on that point. It's like there's only so much you can do when it comes to the government. There's so much that's already in place.
It's recent data. The government currently is employing, so there's over 53% of Americans receive at least a quarter of their income from government aid. That's Social Security, Medicare, Medicaid, earned income tax credit,
Yeah.
and then working directly
SSDI.
for the government as well, or they're working and probably bigger because the government is probably behind, like a company like Palantir, for example, right? Until just recently, they've been heavily reliant on government contracts. So companies like that who are reliant on the government contracts, also you could equate that into the equation.
Yeah.
It's a massive. The government
Is that in that 53%?
I don't think so. That
Palantir's revenue, I know, is 50%.
it's no.
Okay, I was going to say, right.
I'm just saying it's probably a little bigger if you include all of that as well. So the government's huge.
Right, all that
I
government
think,
spending.
if Elon actually has his way, he just gutted Twitter, and then, as he converted into X, it's still running, seemingly pretty well. Maybe he does the same.
Their revenue's down dramatically, though.
Well, there's a lot of boycotts,
I don't want to get into
advertising boycotts.
There's a lot that goes into that revenue being down.
Yeah.
So you can say whatever you want about that. You know what I mean? To
Well,
say that, he's running poorly. But again, that's
something
the
to
thing,
be said
in
for
the
doing
public
too
sector.
much too quickly. Right?
Oh, for sure.
You know what I mean?
Yeah.
Like with every decision, there's a reaction. Some stuff he's done has negatively affected his business. You know what I mean? You don't always have to do stuff, right, for the bottom line. Maybe he did something that he felt was very important for what he believes in, and let's face it, but that can afford it.
Yeah, it was like a $30 billion loss for him so far. Hold on, let me look it up. Twitter market value now.
Yeah, but we'll see what happens with that. That's a temporary loss, right?
Yeah,
and this
80%.
kind of brings us into where I would say too, with focusing on unrealized capital gains, right? They don't allow us to take deductions on unrealized capital losses. So until that comes into play as well, let's shut
it down.
I think we should shove that idea. I don't like it at all. People think that, you can borrow against these billionaires, borrow against their stock. Guess what? Pay interest, okay, to another bank or whatever it is, right, on that money. So if they say, hey, I want to borrow against my stock, I want to borrow $50 million because I want to buy a yacht or whatever the heck they're doing with their money, they're paying interest to that bank. Guess what that bank is doing? They're paying tax on the earnings of that loan, right? You know, for some reason that stock comes down, they're going to call on that. And guess what? If they do need to pay that back at that time and they need to sell stock, that becomes a taxable transaction. There's a lot of different levers there. It's not, I don't think it's quite the boon that everyone thinks it's going to be, because again, there are other entities who are paying tax on that being borrowed. And again, I think it takes away from investment. I also think would be mess to police. And I don't think it would realize quite the numbers that they're projecting, because it would be so hard to police it that they wouldn't be able to do the revenues that they're thinking without massive capital expenditures in the area. You know what I mean? In the area into the IRS, things along those lines, as well as trying to train those people, figure the stuff out. You know what I mean? Things like that. And essentially, you'd have to be like, you would need like a 2-year degree or 4. You know what I mean? Like a legal degree on some of these things to making sure it's being done correctly, prosecuted correctly, and everything that goes into it. I feel like that would be a very difficult.
Yeah. What is, all right, I just want your opinion on this, because this is just, while we're on taxes, what would happen? So we have a progressive tax code here in the United States, right? So that means, as far as I understand, as you make more money, like your first 50,000 is taxed at a lower rate, and then you get more and more, it's taxed at those higher rates. So if you say, I'm paying 40% tax, it's not on all of your income. The 40% is just on the last percentage of income, right? Am I explaining that correctly for everyone listening? Okay.
Yeah. 100%.
What if you were to lower taxes or get rid of them, right? And this is this amazing theory. If we say eliminate income taxes and move towards a flat tax rate, so like sales tax is already as well existent. Is that more of an equalizer across? Whereas if I'm buying a yacht, I'm paying a higher sales tax. I'm buying fancier cars, I'm paying higher tax on those expenditures. So in theory, I want your opinion on this, and just shoot it out of the air if it's wrong. But wealthy people are maybe spending way more money than lower income folks, just because they have less. So then they're going to be paying a higher tax in proportion to their income because of the sales tax. Is that more of an equalizer?
Aren't they already paying
Yeah,
sales tax?
yeah. So the sales tax would.
So you want to have a progressive?
No, I'm
sales
saying would the
tax?
sales, because sales tax is flat, right? You pay the same no matter what. Is that more of an equalizer in your opinion, or is the progressive tax rate? If you had your druthers and you could get rid of one, sales tax or income tax, what would you get rid of? I guess is my question.
Are you trying to put Bill out of a job? You trying to simplify the tax
No,
dramatically?
I would be happy to be at that job. Trust me.
Did the union of CPAs vote against Trump on all this?
No, you got to remember too, like CPAs and accountant, people bring that up all the time, but like I laugh at that because like businesses.
No,
like, tax is
exactly.
aspect of it. So it's people bring that up, and I was like, no, because someone would just shift into they'll just morph their job,
become less stressful for sure. That'd be great.
So yeah, and so that I don't think that would cause a big rift in the industry. There's still plenty of need for accountants, so that books are being held correctly and things like that. But do I think? I don't know. You know what? Your question, if I were to get rid of one or the other, and what? So we get rid of income tax, but then there's a national sales tax. And that's more of an equal.
I don't know. That was my question. I heard it as a theory thrown out.
I don't know,
and I was like, oh, that's interesting. I wonder.
I would have to look into it more, because again, there's still that's a way, right? As opposed to the unrealized, trying to tax unrealized taxes, right? When they borrow their company stock expenditures, right? And the tax rate then. You know what I mean? Or something like that, right? Because then they're, hey, we're buying whatever it might be. But again, they could be buying real estate. Is there a lot of sales tax on real estate? No. Not necessarily buying a lot of, I don't know if they use that many more goods, taxable goods, than the average.
Yeah, maybe they don't. Maybe there's
all stuff you need there is tax on clothing. I don't know. Maybe they are buying more higher end things and stuff like that, but I think it would be more like tax specific items, higher end items, maybe. But then maybe you can add that to a sales tax, right?
So, yeah, okay.
I don't know.
No, I
Always,
it's good. I think it's just
again, is the overhaul worth the effort? Wait, so hey, we could overthrow and do this whole thing, and then it finally plays out. Everything's in theory, right? You got all these people. Oh, this is what it will do. Right? This is what the tariffs. What we believe, right? Yeah, everything is theory. Nothing. You know what I mean? The way markets react and nations react to all these things. Nobody ever thinks of everything, right? When they're putting in policy, right? There's always cracks in every policy, every law, that's why there are lawyers. That's why I mean, there's people who look into these things. Their job is to get around. We can put things in that sound great in theory, but don't actually materialize when the time comes. That's why I'm more in favor of kind of keeping things the way they are and utilizing things to
incentivize. Yeah.
Through the tax code for things, right? Very simply, hey, if we were a company that you manufacture in the U.S., hey, we're willing to give you a little bit more. You know what I mean? To give you a little bit break on your taxes for keeping your business here. You know what I mean? If you want to, be what's the design in Cupertino?
Yeah, design, and manufacture in China. Yep.
You know what I mean? Like something like that, stuff like that. If that's what you want,
Bring them back over. Yeah.
That's fine. You know what I mean? That's fine. But you 5%, right? Or something like that. Which some companies, listen, with the cost of labor and stuff like that, they may still gladly pay. But you know what? At least the U.S. is getting some revenue stream off that to help.
Well, let's get into that. Let's tariffs and Eric, what is going on? What are the implications for stocks, domestic and abroad overall?
Let me just summarize the new, the economic strategy under administration. So in theory, deregulation and lower taxes will benefit corporate profits and help the economy continue to grow. Rather than under the previous administration, it was a lot of government spending, higher taxes, and then pumping money back into the economy. So in this scenario, in this new system, they're just taking less money out to begin with. So what does this mean for the stock market? What we do for a living, right? There's going to be certain winners. With high tariffs, it's domestic companies, right? That's not rocket science. That's common sense, right? Companies like American manufacturers, foreign companies in China, you might see them take a little dip. Small cap and mid cap companies are going to be big winners. That's like your 2 billion to like 20 billion market cap range. They're going to do well because of deregulation. Hopefully interest rates continue to come down, so it's easier for them to borrow money. And then we saw this happen back in 2016 when Trump got elected. More lenient lending policies and increased mergers and acquisitions because the government's not going to step in and block mergers and acquisitions as often. So money's moving around, more free flowing. That's the theory. And there's certainly going to be some winners. And we're going to position our clients in ways to take advantage of that. What they say is could be loser. This is according to JP Morgan, is large cap stocks with foreign exposure. And then some other mega cap stocks might have lower growth rates overall because they're companies like an Amazon, Microsoft, Google, Apple. They all have tons of foreign exposure at this point. They're ginormous companies. I mean, I wouldn't recommend selling any of those if you hold them, right? Continue to hold those, but maybe you're adding to your portfolio those small and mid cap companies because those companies still have just dominant positions.
Bill, what did you just say?
But
and some of those small cap and mid cap, right? They might not have performed as well. You know what I mean? In past years, and they're ripe for maybe being a little undervalued because they just haven't been able to make traction due to the way the current market conditions, which are going to be changed. So maybe they, like you said, with a little less regulation, a little more cash in their pockets due to lower interest and maybe being able to borrow more money for expansion, might be ripe where they have done as well. cyclical markets, right? You know what I mean? Stuff that's doing well doesn't do well forever.
Yeah.
Typically,
Right.
we've had a great, 12-year stretch here for large caps and things along those lines. We have a little longer than that, really, but maybe it's a time where there is some flow into that, and those tend to outperform over the long term, the next 3 to 10 years or something like that. I don't know, right? We'll have to see.
Here's the quote
The winner
from
take
JP
all,
Morgan.
right? Economy
Oh,
that
go
we've
ahead.
been in, I don't know if that's going to change too much just due to the massive amount of money that make. They're able to, I mean, there's a change. They are able to readjust, put their capital to work very quickly without outside financing, without anything like that, right? Just off their earnings. And don't see that changing anytime soon. But maybe a little more water in the pot for everybody, right? So those other sectors.
What's the quote, Eric?
Yeah.
From JP?
Just piggybacking off what Bill was saying too, is after the Trump victory, Google's stock actually popped because of deregulation. People think that a lot of the antitrust thing won't go through ultimately. So you'll see those monopolies and duopolies and stuff remain in place. The quote from JP Morgan this is regarding small and mid cap stocks. They're expected to grow, could be as high as 10 to 15% in 2025. And actually, they also think it could, U.S. small and mid caps could rally 25% to end next year. So they're very high on small and mid caps with the new
Interesting.
administration.
Yeah, I think Trump had was quoted about talking about Google. I'm not sure it makes sense to break them up as well. So
I can
we
see
had all been
regulate them.
talking about it in the office. It's too little too late at this point. There's new entrants, all the AI companies, Anthropic with Claude, Microsoft with ChatGPT. There's all these disruptors in the search space.
not only
It's too
search,
little
but
is
I
what
think
a lot of
Google's
people are
fighting
thinking.
fronts on all sides right now. There's a lot of people coming at them.
Yeah.
Oh, 100%. 100%. What did I say the other day? Just 5 years ago, it's right now it does not. And they're Google, great company. I don't see them going away. They're fighting for every inch, right? You know what I mean? Like they're fighting for every inch of their business,
Yeah.
really. And competition everywhere. To say that they don't, yes, maybe some of the things that they did in terms of paying Apple, right, to make sure they were.
Yeah.
Some of that stuff might have been
Definitely.
A little questionable, right? You know what I mean? No doubt, but where they're at right now, yeah, I just feel like all those companies are. Just look at the spending they're all doing to try to maintain and grow. That's the thing. You're talking billions and billions of dollars because they know that if they don't do it, they're going to get left behind. If they get left behind, their companies are going to be in rough shape. And that's why they're doing it. And they've, how many times have you heard these CEOs we'd rather overspend than underspend, right? You know what I mean? Because the cost of us losing is far worse than we're spending right now. So they know that they have to do it just to keep up. And they're even telling themselves, we probably are. We're probably overspending. But we have to do it. If we don't do it, we're left behind. If we get left behind, we're not going to be able to keep up. And we're not, so they're doing everything they can. So to say that you know what I mean? That they're a monopoly. It's like they're a monopoly waiting to fall. That's all they are. You know what I mean? They don't.
Just to piggyback off that, Bill, what you just said is, and they have to do this, but all great companies have to constantly be putting themselves out of business. If you think about that, you're just innovating, and you'd rather put yourself out of business than a competitor. So you're still in business. So like ChatGPT just announced, hey, we're unrolling search. Guess what? Google's got to do the same thing. They have to innovate. You're already seeing it in the Google search bar whenever you type in a question. Like it's Gemini that's answering the question right at the very top before any other results are on the page.
Oh, yeah. Guess who, you know what I mean? Google used to pay a lot of money to Apple. Guess what Apple did, right? Like they're putting ChatGPT in their phones. You know what I mean? So just sit there and say that competition. It's there.
Absolutely.
You know what I mean? Like it's not knocking on the door. It's kicking the door in, right?
Yep.
You know what I mean? So.
Oh, yeah.
I just think, that there's.
Google's fastest growing revenue stream is a product of competition, actually. It's YouTube Shorts. And that's directly
TikTok
from
and the Reels.
TikTok and then Meta with Reels.
Yep, absolutely. No, you have to constantly innovate. And then back to tariffs, just really quick. If they do that, you're going to see more onshoring of jobs, largely probably manufacturing. Is overall, do you guys view that as a boost to the economy?
So I really think it's going to depend on a few things. To be honest with you, I don't think these widespread tariffs that he's talking about are necessarily going to go through, because what's going to happen is a lot of these business owners and things like that are going to cut. Donald, we love you, but here's the thing, right? You put a tariff on, that's going to crush our bottom line. You know what I mean? Because they're paying the
Sure.
tariffs, right? You know what I mean? And when you think about the globalization of the economy, certain parts, things like that, need manufacture 90% of the stuff, but they still need some stuff coming from other countries. And now all of a sudden we need globalization. It's good to not be specialized in like certain areas, right? Because that actually breeds the economy, makes the economy go.
Yeah.
If we can maybe gather some stuff, or maybe we do a lot of our production, but then we use some of it to supplement. Some of these tariffs negatively, say, for example, and even as Donald's good buddy Elon, he wants to build certain stuff for Tesla cars, and then he looks up and says, "Hey, I like to get these 3 parts right out of the country, and now I have to pay more." Like, that negatively affects them. I think he's going to get on that. So I think there definitely will be some tariffs. I just don't think it's going to be as widespread as they're talking about right now, because again, theory sounds good. In reality,
Yeah.
necessarily not always the easiest way to do things.
Yeah.
Right?
Interesting. Eric, do you have anything to add there?
Yeah, inflation that was the big platform that they ran on, and they certainly don't want to increase inflation, which is often like widespread tariffs. That's a direct causes rising inflation. So very careful there. So they're walking a fine line between protecting American jobs, but also
That's
causing inflation
interesting.
to go up too much. So
Yeah, I'm glad you brought that up.
do.
Yesterday, the Fed announced, Jerome Powell announced that they were cutting another 25 basis points, but they are now a little cautious of inflation coming back. So it sounds like we need to be watching what happens with tariffs and overall. If they're cutting too much, maybe that kicks back inflation. I think we need a healthy amount of inflation, but we don't want to like have it skyrocket again like it did in the past few years.
So right now, right within the past couple months, we've got what causes inflation? Low rates. Or lowering rates. That's an inflationary causing thing. Excess tariffs. That's inflationary causing thing. We literally just got out of having the worst inflation.
The deficit's probably the largest, right? The government spending. If they can cut that, maybe Elon, Department of Government Expenditures, maybe we can stop adding $1 trillion a day.
Yeah, no, but those are the things. So maybe there is some offset there, but I'm just saying those are two.
Oh yeah, no, you're right.
That are inflationary, and we are. I think I heard him talk about tariffs maybe every other day for the past 4 months. One thing, you know what I mean, and then the rates coming down. That's another thing. So to see, I think a lot of the inflation was caused by record amount of money, government kind of money from the pandemic hitting the system. Record low rates. Again, a lot of pandemic stuff related caused a lot of that inflation. So that's why I think we saw it go up and come down as fast as we did. The problem is that it came down on a percentage basis, it was not deflationary. Right? You know what I mean? There was no deflation on the cost of stuff. So it hit that point, it is there. It's just risen slower. So,
yeah.
So no, we'll have to see, and then if we can get control of some of this government spending,
could be good.
But some government spending is good for the economy as well. So you got to remember, going to help one thing, but it is going to hurt some other on some other ends too. So there's an ebb and flow for sure.
Ebb and flow in government is critical to a healthy democracy. Having administrations that are for bigger government, more spending, then other administrations come in, trim the fat, reduce spending. It's all a healthy part of the ebb and flow. I think things are looking very positive for the economy, and there's certainly a lot of opportunities for us on the investment side with our clients, and we're looking to take advantage of those.
I think the U.S. does a better job of that ebb and flow, right, than any other country. Yeah. There have been times where we're like drunken sailors, and then And then there's other times where we need to rein things in. I think the pandemic was something that obviously no one could foresee, right?
Yeah.
Have something like that, and how it was handled, whatever. That's a story for another day. But the fact of the matter was, there was a huge amount of spending that they could not have foreseen.
Absolutely.
That's happened. We're over with it. It needs to be dealt with, right? Because we don't want to be in a situation where in 20, 30 years, we have to have tax increases to pay down. You know what I mean? If we have mass increases and also couple that with massive, that's going to be really devastating. Not going to allow the economy to grow, people to prosper, things like that, right? That would be a bad period. So we need to do some things now, put some things in place to help cut down costs, while keeping the situation manageable and, get those costs, get that government debt into a manageable position.
Do you actually think it'll happen?
Do I?
I think they're all just going to keep spending. That's what they're going to do. Every administration. I don't know.
That's what I'm saying. If they continue on that,
it's a big trouble. Yeah.
So
no, I agree.
You have to.
I hopefully it's all real. They're going to do it.
It's not in our face this moment, right? You know what I mean?
Yeah.
It's not right in our face.
You want to cut Social Security?
It's going to be within the
okay.
Think about this, right? Even Social Security, that's a good thing, right? Or a good point. It's funded past, what is it, 2033? So if it's not funded past that point, guess what's going to more? So now it's going to propel things, straight up. So that's why even more important, right, to have something like that, which is a major backstop for the economy, for seniors, things like that. Which, by the way, like people say, "Oh, should we cut Social Security?" If we lost Social Security, right?
You can't do that. No, it's not a.
So,
but also you lose your voter base. There were like riots in France when they tried to increase the retirement age a little bit. Like it's
I don't think so.
It's too vital.
Yeah.
So that, you know what I mean. But we need to make sure that we can pay that out.
Mm-hmm.
Right. So that's why there does need to be some efficiencies put in place. I'm hoping that they do the right thing. I'm confident that they will. I feel like I know the whole back and forth and everything that goes on with the two-party system, how everyone hates each other. But overall, I feel like there's a lot of people who will everyone pulling in the right direction. And I'm hoping that over the next 10 years, we get a handle on this debt and put ourselves in a good position.
Yeah.
For decades to come.
Absolutely. I think that's a great, we are out of time this week. If you guys are listening at home and you want to write to us, hello@foxhillwealth.com, write to us. We want to hear what you want us to talk about next week. Thank you for listening. As always, it's been a pleasure. Thanks, guys.
All right. Good one.
All right.